Hello everyone, welcome back to Strategize Finance. The month of September for stock market was really brutal. Here we can see in the month of September, the S&P 500 has fallen almost 9%, and year to date we have touched fresh new lows. The S&P 500 is down more than 25% for the year. If you look at the Dow Jones Industrial, that's not any better. It's down more than 21%. Yeah, these 30 stocks, which are considered the what you call best of the breed, the boomer stocks, even they have gone into a bear market territory. And Nasdaq, if you look at the year to date, down more than 33%. Just brutal. Just when we thought that the month of June was the final month in which we could see the lows, where we saw a rise of what, more than 23% in the Nasdaq. From then all the way till September 30th, that's in just 45 days, we have seen almost 20% decline in Nasdaq. Likewise, for the S&P 500, from August mid onwards, we can see a dip of almost 17% just in the last 45 days. And Dow Jones Industrial, likewise, from 16% down in the last 45 days. These are like ridiculous declines. One part of me feels very sad to see market go down so low, but the other part is equally happy, saying that hey, you can grab the greatest of the stocks, the greatest of the ETFs at such low values because bear market gives us opportunities. These are the moments where you can actually sow seeds of amazing returns in the future. In this video, I would like to show how my portfolio has done in this brutal month that we had last, how much dividends I earned, and what is my plan of action for the remainder of the year. Let's check it out. Starting with my M1 Finance portfolio, where my current value is $16,925. The last 1 month, I've seen a decline of more than 10%. I saw a market loss of more than $2,000, but I almost earned a dividend of $100 over here. Looking at the dividends earned in this portfolio for September, we start with the Black Hills giving almost $2, Cummins just over $2, Enbridge $3.69, UPS $1.11, Johnson & Johnson almost $2, Pfizer $1.74, Walmart 85 cents, Landell Basel more than $2, JP $6.48, JetQ $6.41, Tractor Supply almost $1, Walgreens $2.21, Sherwin-Williams $0.50, Target almost $1.50, 3M $2.36, Prudential just over $3, Realty Income almost $1, Whirlpool almost $2, Consolidated Edison just over $2, L3 Harris $1.33, McDonald's $1.34, Qualcomm just under $1, VYMI $3.07, VIGI 65 cents, BlackRock $1.61, Lockheed Martin $1.96, almost $2, SCHT almost $6, RYLD $2.61, VNQ just under $4, the Vanguard Small Cap VBR $1.31, the Vanguard Growth 73 cents, Vanguard Value $2.57, Goldman Sachs $1.62, T. Rowe Price $2.12. Devo paid me slightly more than what we see here, 8 cents. I'll show you in the next page. Bank of America $1.31, Broadcom just over $1, Digital Realty $1.38, PepsiCo $1.45, Union Pacific just over $1, and Devo here paying $2.34. So together, what we saw in the last page, it's $2.42. So I track my M1 Finance portfolio in an Excel sheet also. As you can see here, my overall gain is negative, just down over 15%, with the 3M being the biggest loser, over 40%, and the energy ETF VDE being the best gainer, 42%. This one was hovering around 55 or 57% as of last month. So yeah, I can see a dip of over 15% in the last 1 month. So adding up all the dividends for the month of September, it comes out to be $83.04, which is almost $2 less than what it was in the month of June. Another reason for this decline actually. So back in late July, I had sold out my positions in XYLD and QYLD and had invested them into JEPQ. So QYLD and XYLD pay out towards the end of the month, whereas JEPQ pays out towards the start of the month. So due to this transition, what I should have expected but to be paid by end of September is no longer there. I should be getting paid by JetQ towards the start of the next month. So by October first week, I would be getting the dividend payments. So because of that switch, my overall payment for Q3 got misaligned over there. But from Q4 onwards, everything should be back in as it should be. From a quarterly perspective, we can see $189.24, which is almost $13 more than what was in Q2. And if I compare it with Q3 of last year, it's more than twice. It's really amazing. Even from an annual dividend perspective, my 2022 dividends are more than twice that of the entire 2021. So I have a whole quarter remaining, and I've almost doubled. Not almost. I did actually beat 2021 by a huge margin. But the best part over here is the snowball chart. So as we can see, this is like dividends per quarter. So as we can see here, a nice laddered growth going constantly upwards. So this shows that initially, yes, the dividends may be less, but slowly they just add up. You keep investing consistently, irrespective of what the market is, what it's doing, and your dividends will keep on growing. And these charts are just amazing to see. You can actually validate your performance through these, saying, hey, yes, you stick to your guns, keep investing consistently, be disciplined, and you will be paid. Looking forward to the month of October, here I can actually see what all payments I can be paid. So we can see the VOO, the S&P 500 ETF, almost $2.75. Genuine Parts $1.26. Coca-Cola $1.51. The Vanguard Energy ETF paying me $1.70. Likewise, the Vanguard Utility ETF paying 60 cents. In fact, these two ETFs actually pay towards the end of the month. In fact, this is one more reason. Like you can see, almost $1.70 just getting paid into the next quarter. So yeah, these are the minor changes which are not in your control. Kimberly Clark almost $2. HPQ $1.64. Vici $3.43. Merck $2.39. Altria Group almost $6. Omnicom $2.28. Medical Properties $2.57. Realty Income, the monthly payer almost a dollar. WP Carry $3.10. Medtronic $1.84. Leggett and Platt $2.41. Oracle 76 cents. Comcast $1.76. Cisco $1.66. And finally JP Morgan $2.13. So adding all this up, you can see a sum of almost $42 to be paid in the month of October, which is good. This shows me that your cash flow will keep on coming in. Here we can also see how different companies have increased their dividend payments. You can see Vici increasing by almost 8%, Alter Group 4.5%. Realty Income keeps raising every month or almost every quarter. Likewise, WP Carry. So yeah, these are the companies which keep on increasing their dividends consistently, which is what you want to be invested into. Overall, I can see my portfolio doing relatively good actually. I'm not sad that okay, hey, it's down more than 15% over here. So you can see here almost $800 paid annually with my dividend yield of almost 4.7%. So yeah, these numbers are pretty impressive. Moving on to my Fidelity portfolio, where the current value is $16,527, getting paid almost $566 annually with this yield of almost 3.42%. Here, my overall gain is negative, almost under 12%. Dividends from this portfolio in the month of September include $1.27 from WEC, Pinnacle West $2.80, Kroger almost a dollar, American States Water 71 cents, Aflac $1.46, Southern Company $1.63, JEPQ 55 cents, JP 56 cents, Amgen $1.85, Parker Hannifin almost a dollar, Eli Lilly 59, Huntington Ingalls $1.33, ExxonMobil 61 cents, Emerson $1.13, American Electric Power $1.47, Rockwell 60 cents, PPG Industries 66 cents, Chevron just over $2, Old Republic, these two together $10.66, NextEra 83 cents, Interpublic Group just over $2, Ryzen 32 cents, Seaborg Global Markets 80 cents, Duke Energy 41, Main Street Capital 79, Pembina Pipeline, there's a monthly payer at 80 cents, VF Corp $1.80, SPYD $3.59, the Fidelity Real Estate ETF FRL 57, One Life Financial almost $3, Vanguard Emerging 53 cents, Vanguard International $0.71, VYM $3.69, VIG $2.33, KOMP 34 cents, Waste Management 64, the S&P 500 equal weighted ETF $2.29, Exponent 33 cents, the Schwab Real Estate ETF 73 cents, ACHD $7.49, VTI 80 cents, CTO $4.69, Devon $5.12, S&P Growth 25 cents, HDV for $4.46, Quality ETF 80 cents, DGRO $4.01, and 7 Property almost a dollar. Altogether, it comes out to be $86.42 for the month of September. And you can't even compare this quarter with any of the before ones because in the month of July, I had moved my portfolio of Stash, which was a ETF exclusive portfolio, into Fidelity. So that's the reason why we see for the month of September, where most of these ETFs pay out their dividends, the value of this just 1 month being higher than any of the ones before. But from here on, I can actually compare month over month. Quarterly speaking, almost $138, annually over $303. And here again, the snowball effect by quarter. You can see the dividends growing nicely quarter over quarter. Looking at the upcoming dividends from this portfolio for the month of October, we have the Vanguard Mega Cap paying me $5.31, Huntington Bancshares $2.47, Iron Mountain $2.12, Broadridge 67, International Flavors 19 cents, Chubb 20 cents, Best Buy $2.59, Amphenol 58, Philip Morris $2.11, Mondelez $1.20, Pembina 81 cents, Main Street 81 cents, Franklin Resources $1.50, Verizon 32 cents. Store Capital will pay me for the month of October. I in fact sold out of this position after the ex-dividend date. Then we have Federal Realty $2.44, Packaging Corp 33 cents, American Tower $1.92, IDEX $1.42, QQQ paying 52 cents, and the last Toronto Dominion $2.39. Overall, almost $29, but including the store capital's payment of over $4, I should be seeing somewhere around $33 in the payments. So if I compare that to the July payment of $23, it's like $10 more than that. Overall, in this portfolio, as we can see, paying me almost $566 annually. Here, UNM being the best performer, the Unum Group. ARC Financial, I have a very, very small portion in my portfolio here. It's down more than 70%. I've just left the ARC ETFs. So I have almost like 2 or 3 shares of each ETF from ARC in this portfolio. So I've just let them ride whatever they do. So my biggest losers should always be the ARC funds. I don't care for that. But other than that, this portfolio has been pretty solid compared against my M1 Finance portfolio. But yeah, again, I'll just keep on investing into these, irrespective of what the market says or does, and I should be able to reap benefits in the long run. Now, coming to the last, which is the Acorns portfolio. Here, the portfolio value is almost $3,668 right now, paying me almost $94 annually at a yield of 2.56%. This is a very simple portfolio having just four holdings: VOO, IJH, IJR, and the IXUS. VOO is the S&P 500 ETF, IJH is the mid cap, IJR is the small cap, and IXUS is the international. This portfolio was my first ever investing portfolio, which I started in January of 2018. So another 3 months, and yeah, it will finish my 5 years of investing into Acorns. This is a simple portfolio that runs in the background. I've made many videos in the past which show you how simple it is to let your daily purchases also contribute to the investment into this. I really, if someone is very skeptical of, oh, what should I do, where should I invest or something, just start with an Acorns portfolio. It's very simple. Though I invest heavily into my M1 Finance and the Fidelity portfolios, I've not closed this one. I've just let it. I just invest like $25 every week into this. And apart from that, I have the roundups also getting invested regularly. So it just runs in the background. I only see this portfolio during this portfolio checkups at the end of the month. That's it, nothing else. I don't change anything, it just runs. As you can see here again, even annually speaking, every year the values just keep increasing. IXUS pays semi-annually, so in month of June and December. So I'm hoping by December, this bar of 2022 should catch up and be more than what it was in 2021. So yeah, a very simple portfolio, and I'm really proud that I've not actually stopped this portfolio like what I did with Stash. I'll just let this run forever. So combining these three portfolios together, I have a consolidated spreadsheet. As you can see here, my total cost is just over $42,611, and my current value is $37.114. Overall gain is almost negative 13%. My annual dividend is $1,453. Yield is almost 4%. So in the January of last year, 2021, I set out these goals for myself that hey, by end of 2022, I should be reaching $1,500, and by 2025, it's like 5 years from then, I should be having $5,000 in dividend income. So if you look at these numbers, right, from end of 2022, I'm almost like 97% to it. So like this $47 more, that should be reaching 1500, the goal for that. And I'm pretty sure with my regular investments that I do into my portfolios, I should be able to reach that goal very easily. And these are the other dividend metrics. So what I did is basically if the dividend income is divided by monthly, I get paid like $121 every month, likewise $28 every week, almost $4 every day, 17 cents every hour. That's like 24-hour period. But if I just look like a 8-hour work window, I get paid like 70 cents. I hope that as my portfolio keeps growing, even these metrics keep changing, so just to keep a track in a fun way. Looking at my overall portfolio, I can see the defensive stocks doing the best. Healthcare just under 5%, staples down more than 6%, likewise utilities. This absolutely reflects how the overall market is doing right now. The defensive sectors being the best performers, and sensitive and cyclicals are just getting beaten up. Even here we can see dividends growth. Like early part of my investing journey, I was never focused on the dividend side of it, and it was all erratic. But later in 2021, early part of 2021, when I completely moved my focus into dividend side of investing, and from then we can see the nice uptick in all the dividends. We can see the growth quarterly, annually. Here we can see a nice laddered growth. Overall, I'll just say one thing: keep investing, be disciplined, irrespective of what the market does. Just keep investing regularly, consistently, and you will just see your portfolio give amazing returns in the long run. So that's all I have for this in the video. Hope you all liked it. Until we meet in the next video, let's try to do as much as possible to be financially healthy. See ya. Bye.